Good evening, everyone, and welcome to another ACY Securities webinar. For those of you who might be new tonight, my name is Alistair Schultz, and I'm the Chief Market Analyst for ACY Securities. And my experience traverses all across the globe and in a variety of different markets over the many years. So these days, I think I've been in the industry for probably a bit over 15 years, and I got my start working on the floors of Wall Street, and I've worked my way through a variety of different investment funds. So if you do have any questions or at any stage throughout while we're going through our session tonight, then please feel free to ask me a question. I'll do my best to answer it. There's not too many that I can't answer. And even if I don't know it, I will certainly try and fill in the gap for you at an alternative time. Now, in tonight's session, we are going to be having a look at a few different things. I thought it might not be a bad idea for us to have a look at what is kind of happening with silver at the moment. There's a fair bit of information action that's all been quite exciting from the GME and the Wall Street bet side of things that sort of has happened. And I was just going to provide you guys with a little bit of a review from that front because I thought it would be quite useful. In addition to that, we're going to have a bit of a talk about what might be happening on the front of a consideration for what's happening tonight with the Bank of England, and of course what might be going down with the pound. And outside of this, I'm happy to sort of look at any of your sort of charts. Of course, I'll try and talk about the Australian dollar as well. So please, if you do have something in mind, then don't be shy. Let me know, and I will certainly do my best to give you guys a bit of a hand along the way. So we'll get right stuck into it. Obviously, the first thing I have to go through is a risk disclosure warning. Now, this warning basically states that trading can be risky because it does carry a certain level of leverage. But regardless of what asset class you really pick, whether it be property, stocks, futures, options, commodities, or anything else in between, there is always some level of risk. And so it's very important to understand, firstly, what your investment objective is, i.e. what do you want to do with the money, how much you're expecting to pull out of it, and have a clear guideline for yourself to work to. Also, obviously, understand your own risk tolerances and make sure you're not going in too heavy or too light or wherever it may be in between. Often lighter is better. And don't obviously try and trade things that you can't afford to sort of lose the money on. Now, of course, everything else in all of that is your own trading experience. But regardless, in tonight's session, I can't give you guys personal advice. It is entirely general advice, just purely because of the nature of a webinar, and I don't know your own financial situation, so it's hard for me to comment, and I wouldn't want to try and do that anyway. If you feel like you need to reach out or get some help on that front, please let me know, and I will try and put you in contact with someone who may be able to help you. Of course, also do a bit of your own research as well. It always helps. Now, to get things sort of kicking off the bat, we might have a quick look at the calendar just to give us all a bit of an idea on what's going on tonight. So really, the main things that I'm looking at tonight are going to be on these ones here: the Asset Purchase Facility, Bank of England Monetary Policy Report, and probably hear something about the Monetary Policy Summary and what they might be doing with the official bank rate. Everything before that is rather low impact events. So everything we've got going on here on French 10-year bond auctions, 10-year Spanish auctions, bond guides as well, the retail sales construction PMI. The only one that really sort of I like the look of is the ECB economic bulletin there. I don't really pay too much attention to these two. I prefer to keep an eye on what's going on with the German stuff, just because it has usually the most impact for the European Union. And this one's already been, but it's not quite. I don't really want to look at it. We know sort of what goes on with consumer sentiment, so we might give that one a miss tonight. Of course, I will be wanting to hear what the Bank of England's Governor Bailey says, and we want to see what the US unemployment claims might be. Now, the reason for some of the importance on these things, obviously, Bank of England monetary policy rates are going to give us some movement on the pound, most likely. And of course, the unemployment claims. We've got NFP tomorrow night. So with non-farm payroll coming out tomorrow, we currently at ACY are also sponsoring a trading competition, Trading Cup, and we are actually having the finals tomorrow night. So that wouldn't be a bad thing to tune into. I think we've got about 30 different traders who are logging in to try and score themselves about $100,000 in a trading account, somewhere in between and it's split up between sort of different placements, but it'll all be sort of around the NFP time zone. So moving into the first things that we're going to take into the market considerations for tonight, I will just move this out of our way. I'll give us a bit of a chart to have right here. Now I'm going to leave it on the pound just for the moment. But before we get into the pound, I thought it might be useful to have a look at this. Now, I have a bit of a slide deck. I was on Ausbiz TV this afternoon, and I was showing them a couple of different things, thinking about sentiment. So I have this little bit of a PowerPoint sort of going on. No, we might just get rid of that and try and squish this up so we can get a bit better picture. Now, this right here is an image that I've charted up a little bit earlier this morning, and it's on silver. So it's XAG versus the USD. And what we're looking at here is what's gone on with trading sentiment in terms of volume on where we were thinking during the short squeeze that we saw on the 1st of February and probably even the 29th of January. So many of you will likely already be a little bit familiar with the GME and the Wall Street Bet saga and AMC and all that. And silver has been somewhat affected, but it didn't get anywhere near the same sort of push. There just didn't seem to have been as many people that were interested in going the silver route from that social element side of things. And plus they had a few conflicts of interest on trying to push the price up because they didn't want other people to make money where they would make money. They want to sort of take other people's money. So in this instance, what we're seeing here is you can see right before we actually had people starting to increase their positions. So we had like sort of 67% of traders wanting to go long on volume. Then as we've gotten a bit further up, it's increased it's on the short side as it's going up. And it's actually gotten to the peak of negative side of things on top of the 1st of Feb. So people were wanting to short it at the very top of this almost. And I believe what we've seen during this day, because this is over a 24-hour period, so that's all the volume for one whole day. If I was to break it down further, which would be quite difficult to do in the post-action sort of thing, looking at an hourly basis, you might find that you would have had more people going long and long and long as it goes up. And then they would have seen this sort of pattern here, which whilst maybe not a perfect shape of any kind, definitely gives us a little bit of suspicion for on its way down. Now, I would have been quite comfortable taking the sort of a trade on a short off this, but I wasn't trading silver. It's not one of my things that I tend to focus on a great deal. And then it's kind of come down. And so then now, where we're sitting now, we've almost got a 50-50. So whenever I look at consumer sentiment, trading sentiment, whether that be from a commitment of traders report or volumes or market depth or whatever it may be, I tend to always look at anything that's 50-50. If it's 45% one side and 55 the other, I kind of look at that as the breaking point for it being mixed sentiment, so to speak. So if it's anything above that, so like let's say we get 60-40, it's pretty clear. When it gets to 55, it's very fickle. That 5% can go to 45 to 55. You've got a 10% leeway, I tend to give it, as opposed to saying it's bullish or bearish. If it's between those two markers, I tend to go with it's kind of mixed at the moment. So right now, this is mixed, and evidently, short price, like sideways price action is what we're seeing. Now, moving it across to the next side, here's the XAG USD, and you can see 50.5%, 49.52%. I look at this as being very mixed indeed. The commitment of traders report, COT, that whenever you read these reports, which they give you the long side, short side, and they also do it via individual currency, not via currency pairs. So you always have to sort of use two. Now, interestingly enough, when we look at the commitment of traders report for the US dollar, one of the factors to keep in mind, I will just flick to the next chart so you can sort of see what I'm saying. US dollar commercial short positions, very, very light versus non-commercial shorts, which means, so on commercial shorts, we're talking about institutional trading level. On non-commercial, we're talking about retail sort of stuff. On the long side, they're both very, very similar. There's very barely a variance in them. But on the short side, more retail traders and much more interested in a short position on the US dollar, whilst the commercial guys are not all that keen to take that just yet. So we will have a bit of a look at that a bit later. Now, when we look at what's going here on this silver chart, I'm going to take it off this thing so that we can actually have a look at it a little bit more in depth, a little bit more up to date. So we will just go to XAG very, very quickly. I think I was using a 15-minute chart. We might just, yeah, there we go. Yeah, so either way, I'm still sitting comfortably with this line here on the 26 mark, but we might just move to a monthly just in case people have lost their perspective. This is what we drew on Tuesday. Now, right here, would have been nice if that was a little bit lower, because we could have almost, like, if this wick was down here, we could have gone, oh, that's a bit of a double top. We can short that all the way down now, but it's not. It's actually broken it. It's not anywhere in a nice sort of place. But interesting enough, the lines that we have drawn on Monday are being respected. We've got on the bottom side here being the channel happening. This one here, whilst it's been busted through, it has gotten hung up right on it. So that's a nice sign to see that it is active, working as support and resistance. In fact, it's happened a couple of times there. And same as on this bottom side, we've got 2 touchdowns going on. And a fair bit up on this side. So whenever we get that, it just kind of validates our position a little bit more and what we're thinking about in terms of where price is sort of going. Now, realistically, where do I think that the silver sort of price is really going to be going? I think personally, it is actually not a bad investment class to be considering. It's one of those ones where it is worth the time, effort, and money to keep an eye on it. It's probably a good store of value to a certain degree. But because it is a cheap asset class as well, you can buy a fair bit of it, and it is still somewhat valuable. And as silver goes, it's more of an industrial metal. I mean, whilst it's considered a precious metal, I still look at it as being a bit industrial. So that certainly keeps me thinking about where things might go in the interim period, especially when we've got this push towards electric vehicles and solar panels and lots of electronic components and this tech sector sort of stuff. So, it kind of increases the level of demand. The only thing is that it's much more readily available than what the scarcity that gold has, which is why we see a bit of a price difference on that front. Now, dropping us down to this hourly chart, we've got kind of, a bit of sideways action. We drew this in before. This is where we had our bit of our push bump up. This has been filled somewhat over here, but like I said last week, filling gaps doesn't necessarily always work. It's kind of 50-50 on that front. Right now, I am not, minding this sort of shape down this way. I think we are still in a bit of a range going on at the moment. We might even change the time frame down before I start drawing that sort of line, make it more relevant to today. Oh, it's not deleting. There we go. And right now, I'm still thinking that the $26, this $26 mark here, probably even just a little bit higher, like sitting about there, $26.26, which is a funny price for it to be sitting at. I think that's actually not a bad place for us to move a little bit of a line across here, just whack one in like that. And then I think this is probably a reasonable point for long positions. I can't see the price really falling too much further below. But we don't know for the interim period. Now, let's drop it down to this 15-minute chart here, see what we can get. I mean, there's not much new action compared to what we were looking at before. This here is a nice double bottom pattern. It has played itself out. You can see you've got the run down, the end of the runs happens. You've got you've got a double wick, which is always nice, off a resistance point, comes up, comes down, fails to break the resistance, the support in any way, shape, or form, and then travels its way up. Now, it may not actually have made the full target range just yet. What do we got here? 43. It's hit 40, 39, 40. So near enough, good enough, but not quite perfect. Over this sort of range we've got happening here, there's that sort of same sort of downward angle that we're looking for. I'm trying to make it fit a bit better. There we go. There's one that sort of works for us. Now, we've got a bit of a contracting range sort of happening. So ideally, we want to be trading our way long from the bottom, short from the top, and try and bounce our way through this range until we get a breakout happening. So ideally with silver at the moment, I think because we've had so much action on it in the last week, it's taking that little bit of a breather. Price is probably going to be a little bit sideways and consolidated, and then we're just going to be waiting for the breakout. But I'm overall more on the long side of this, thinking that it will probably try and retest that $30 mark at some stage. And chances are, if it does start rallying like that, you'll probably see a lot of social traders trying to jump on the bandwagon with it. So I'm going to be keeping an eye on silver over the next couple of weeks just to see where things actually go. Now, let's have a bit of a move on from that. The next one that we're going to have a look at here is the Aussie dollar. Now, Aussie has, we did speak about Aussie. We had an RBA announcement this week. It has obviously been flying up for what feels like almost forever, but is really not all that much of a very long period of time at all. I'm just going to move that down like that, give us something to work with. Now, in terms of where our support and resistance might lie from a longer term pillar, the move that we saw from the RBA this week to increase the or expand the asset purchase program by 100 billion off the top of my head was, in part of me, which is, this is where it was at the top and it sort of released and it came down. In part of me, I'm sort of sitting in this bracket right now thinking that we have sort of two areas of support and resistance to consider over a period of time. So the first one is at the very low end of the 76 price range. So 75, 71 there, that'll do. And then the second one is on the high side of it. So that would be almost there, a little bit more if I can open up too far. I'm not going to get that on this time frame, so we'll just leave it there. So even though it's the tiniest, most narrow range on this time frame on a monthly, price is sort of sitting in this area right now where it's been kind of sideways. Price actually, there we go. We can probably move it up a little bit more. Nope, not quite. So in the immediate moment, I'm still looking at this from the very short. We've got here basically a 100 pip range between the low end of the 76 and the high end of the 76, and it's been moving through that. Now, the further up the time frame we get, or the closer to, the more obvious it sort of becomes. This was, a couple of days ago, so this is obviously today. Yesterday, the RBA action on this day, people have had time to think about it. It's been pushing its way down. It's moved down. It has bounced on the outside of this. I think the lower end of the Aussie dollar is really the 70-cent range. Like at it probably low, but I don't think it would probably get that far all that quickly. I know Westpac are considering the idea of the long side of this over a longer period of time being about 85 cents, which I think is actually, it's optimistic to say the least, but it's also possibly not where the RBA wants to go. And the reason I think this is because we've actually seen this RBA action earlier in the week where they did expand this program, and there was really no need to. We had exports going okay. We had plenty of people getting new jobs and things along those lines. We had, pretty good coronavirus situation. All our borders were open at the current time and what was available at the time in terms of information. So to me, there wasn't this huge desire or need to actually expand. It should have been, let's just sit down, hold up, sit on our hands for a minute and see where things sort of travel over the next little while. Now, in this scenario, they have ended up actually expanding it, and I think it's been unnecessarily done, but I think they've actually done it to try and keep the Australian dollar from going too high. Personally, I think 80 cents is probably my upper range limit for where the Aussie dollar goes. I don't think we'll see parity against the US dollar. The only way that will actually happen is if we continue to see more stimulus coming out of the US. Yes, we know there's a pretty big package on the way, but it's still not here yet. So until that comes out, the information remains the same. There's really no reason for us to try and go against what it's doing at this point in time. So from the Aussie point of view, it's probably a little bit premature to be increasing and expanding. And the reason they're doing it is purely because the higher the value of the Aussie dollar, the less competitive we are on exports. And as a commodity-driven country, we export everything. So that makes us a little bit of a range. So in right now, I am sort of thinking about this area in between here as not so much a barrier, but a place where price is probably going to hang out for a little bit. Here isn't real attractive. We do definitely have this ongoing downtrend sort of happening. It's not a perfect downtrend. It's just advancing in its downtrend. So, you've got across here, then you can go across to this one and get it that way, then even this one to this one is kind of getting sharper, and we get sharper again. And then it's not been until the most recent one that it sort of started to decrease on that acceleration. Now, reality-wise, I still think the 76 range is somewhere for us to keep an eye on. Also, we spoke about this the other day. We've got only 144 pip until our major upside trend thing. So no further, the 75, by the time we get to sort of 75 cents is probably where we're probably going to see, if it does get down there, that is, where we would likely, again, see a pushback up away from it, because it was going higher and would have likely gone higher had we not seen intervention from the RBA at this stage. So, that's kind of where I'm sitting at the moment with it. 1 hour chart, nothing real crazy there. 15-minute chart, sideways as. Total honesty, would not probably want to trade any of this. It's pretty choppy. You could certainly hold a position for the long side and hope for the best, but the price action here is just crap, without, pardon my language, but it is. It's red, green, red, green, red, green all the way through. This is not an area. And so right now, I think we have basically this range that we're sort of sitting in seems to have broken out. So originally I had sort of stuff sitting in about, that didn't work. Why did that not work? Originally I had lines sort of sitting in this sort of area here, with that as my bottom side on the 76.001. And probably one in around this area here, just on the lower end. And I had one on the top, but it's since broken this afternoon, and it's only just busted out free recently. So I am going to keep a close eye on this just to see where it does travel. In the interim moment, in this immediate moment, it has actually, sort of popped its way out, but I'm not going to hang on to the Aussie just yet. I would like to see further evidence of it actually going in the direction we want. Now, let's have a talk about the pound. So the pound tonight, when we think about it, I'll just bring up, just to refresh your memory, we do have the Bank of England giving a little bit of a report tonight here on our asset purchase program, our monetary policy report, the MPC votes, which really dictate on these two, plus the official bank rate or the interest rate votes, and monetary policy sort of side of things. So there's a bit going on that front. Now, why, or what do we have to consider when we look at all of that? Now, I've actually done a bit of a talk on this today, so we are just going to move it down. Yep, here we go. Okay. Now, this was from earlier today, so the chart isn't going to match up exactly, but it is still kind of relevant. So, we'll put it on the same time frame, so you can see that it's still not all that far off. Where's my mouse gone? There it is. Okay, I'll move that back over here. Okay, so looking at this chart here, and then trying to compare it to this one. Whoops, that's not worked in my favor. I'll just get rid of the auto. There we go. That should fix it for us so we can see it all. Okay, so looking at this chart here, the area that I've got these purple lines on is coming down here. Now, I'm quite happy to keep drawing them. And at the time when I did draw them, when I was on the program sort of earlier this morning, we were sitting at about this point here. And I'll just zoom it out so that we can all sort of get a better idea of where that is. Now, here we go. It went sort of something like that. I had one sort of coming down this way, and I had a secondary one coming from the back up here. And these were my sort of two trend lines that I was looking at. Now, prices already started to fall ahead of the RBA action today. And if you actually have a look at this chart that I've got here on this little screen sort of snippet thing here, we could see already at ACY, like in terms of volume, 73% of traders were wanting to do a short position. So, that was at this point here, right in and around there at this point here. And since then, it has already started to fall. I personally had a negative rate line, which was basically this line here. It's already busted through that, and the Bank of England hasn't even released. Now, what is it that I am sort of thinking of when I do this? Now, the first thing, I'll just bring this back up and make it a bit bigger for us. Now, reason is, one, unemployment is rising. It's currently at 5%. Every month, for the last couple of months so far. It has ticked up by 0.1% each time. So last month it was 4.9, month before that 4.8. So it's continually started rising. Our services UK services sector has continually contracted. So less and less rising unemployment, less people working in services-based industry. That might include retail shopping and outlets. It might also include food and restaurants and plumbers and anything like that, anything that's basically a service. Then our consumer sentiment has fallen again by about 2 points this time, and it's in a negative number. It is negative 28. It's not down 28 points. It's negative 28 points from zero. So, that's really bad. People are not happy or positive about what's going on. Their inflation, which is probably the most important one of this, is still only at 0.6%. They've got a target of 2%, and they're not even getting anywhere near it. Current interest rate, 0.1% as well. And the last time they did quantitative easing was November 2020. So bearing all of that in mind, when we think about what's going on with the pound in the immediate moment, we've got that, bad contracting services, rising and higher unemployment, consumer sentiment's poor, inflation is low, and the rate is nearly at 0%. And because they did the quantitative easing in November, it's unlikely that they want to do it this time round. So it really leaves them with only one of two options. Option number one, do nothing, sit on your hands and see where it goes. Option two, consider the idea of looking for going into negative interest rates, which we've heard already that they're not all that keen on doing. People have obviously been shorting this position for a while now already, because I know I definitely had a little bit of a marker for myself at the 1.36 range, which was about there, or even a bit lower. Oh yeah, just here. So I had a marker just at this point here that I was anticipating not seeing price sort of, if it got below this point when the announcement happened, then I've considered that from here on down, it could potentially enter into a scenario where it had free fall. Now, when I say that, I mean, look here on this chart, between here and here, there's not a great deal of room, another 77 pip. There's not, this is your level of your last level of basically support for quite some time. That one and this one here, and it quite easily moved quite down a significant sort of way. Now, 136 would have been nice if they weren't doing the reduced interest rate side of things. What's happening right now? I'm trying to see if I can find something that actually is relevant to this, but I actually think people are sort of preparing for the idea that a negative interest rate is coming out. Now, when we think about what's going on, what's going to happen for the Bank of England tonight, we might be already seeing stuff getting priced in. But regardless of that, Bank of England's in a bit of a tight spot. They're in an area where in the very near term, they have very little positive news. It's quite negative. People are pessimistic about the current world events, particularly in the UK, where they're all in lockdown. They still have lots of issues with coronavirus. They have lots of vaccines going out, which is probably the positive element to consider. And I think that, though, is more the long-term result. Yeah. So in the short term, near term, coronavirus is still plaguing and giving them lots of pain. And they really, and I suppose the Bank of England really needs to balance out the idea of short-term pain with the long-term optimism that's going to come. So, do they go to negative interest rates? So I personally think they shouldn't. If you go to a negative interest rate, you will likely end up stuck in that scenario. It happens all too often. So, going to a negative interest rate probably boosts the money supply a little bit, allows them to sort of get a bit of an improvement. But outside of that, it's not happy days in my book anyway. And we are already seeing people feeling a bit pessimistic about the UK situation. From the US angle, the US dollar is also at probably one of its highest sort of points. We could even have a look at that. I would say there's probably some news on the US side that's relevant to what's going on now, but without actually having looked and done a bit of research or looked around and scoped out what's happening in the very, very moment that we're sitting. It's kind of hard to say exactly what's going on. I'm just having a look at the calendar to see if there's anything that stands out in this very second. No, there's not really anything here. Or we have construction PMI, but that's not until 8:30 tonight. So yeah, on the economic calendar, as far as scheduled releases, there's nothing for the US, nothing for the UK. So this could very well be people getting in early ahead of the rate and thinking that it is likely going to be an introduction of a negative interest rate. So in that instance, I'm confident, I'm happy, I'm quite relaxed about the idea that positions that I have on the pound are going short, but we will have to keep an eye on this position when it does come up to that actual time. Now, I have been talking for pretty much 30 minutes straight. If anyone has a question or anything like that, please feel free. I've got probably about 10 minutes left that I can dedicate, where because we have the trading cup competition on tomorrow night, there has been pretty crazy day sort of happening. I've been chasing my tail, and so has everyone else in the office. So feel free to reach out, ask any sort of questions that you have now. Send me a chart if you have one. If you do, please send it through the Zoom webinar chat function. Now, to access that, you simply go up to the More tab and then click on chat, or alternatively, you can hit if you're on a Windows computer, you can hit the Alt button and hold H at the same time. Right, so that's really sort of where it's sitting. 5-minute chart that we're looking at now for pound. I'll give you guys a couple of minutes and probably see if we can mark anything up. Here we've got a nice little channel starting to occur on this front that we could certainly take into the spectrum. I think this is likely going to continue going short for a little while. We'll have to sort of keep an eye on that, but that's the game of trading without keeping your eyes on it for a little bit at a time sometimes. Now, it doesn't seem like anyone's really got any questions as it's sort of coming through. I think that might be quite covered, and that you guys have enjoyed it. Now, moving forward to what else we might have to discuss today. I have been keeping a pretty close tab on what has been going on elsewhere in the world. I would like to sort of just give you guys a bit of a rundown before you get into the late market trading day. I'm just trying to find where I put my notes, which are on the wrong ones. Here we go. Now, realistically, when we think about what's been happening around the world for the rest of today, we've seen our S&P 500 positions sort of moving in happy direction. So I will just move it to the S&P. Where we go? Here we go. Now, I know some of the tech companies saw all-time highs today. So today it's not in the perfect realm. I might just clear this off so that it's not bothering us and getting in the way of things there. There we go. I'm not one that uses trend lines all the time, by the way. It's just moving averages all the time. It's just occasionally, if you are in a long-term trend, using them as a regression tool becomes quite helpful. Notice how one of the big things that we've been talking about throughout the day so far as well, and this might actually be something worth bringing up before I go on. Now, futures have sort of slipped on the S&P 500, but the gauge has sort of closed in the green, but only just barely in the overnight session. We also saw the biggest 2-day rally in almost 3 months for it. South Korean, Hong Kong stocks have been a little bit lower. Chinese shares have retreated a little bit as well. So we've seen a few different things happening, particularly on sort of comments about being blacklisted by President Joe Biden for a few different people in their office. The NASDAQ 100 has closed lower, as well as has Amazon. Amazon hasn't done well at all. And that's because the CEO, Jeff Bezos, is stepping down from CEO to become chairman and replaced him with another bloke. Outside of that, we're also hearing oil is still continuing its rally up. So to give you guys a bit of a look at that, oil has been pushing a little bit higher purely on OPEC saying that they're keeping very, very close to the long-running oil output cuts that they've been doing. There it is, US WTI. So here we are. We've seen it rising a little bit further. So it's up $50 to $56 now. It wasn't all that long ago. I can remember taking positions down here. So it is probably going to continue rising at this point in time. I don't imagine they'll want to continue to increase production. They still have plenty of surplus, but it does look like it is starting to ease on the surplus side of things. Now, overall, I think there's really been a lot of noise in stock markets the last few weeks. So, this week it's been pretty encouraging to really see some solid economic reads coming out. We are getting some signs of overextension in some places in single stocks, but under the surface, there is some level of an economy starting to regain some pretty good momentum. And I think the second half of this year is really going to be dependent on our vaccine results. So, that's still a risk for us. But certainly, the labour market is starting to heal, at least here in Australia. I'm hoping we see the same sort of thing in the US. There's still a long way to go. There's still probably going to be a lot of scarring to happen, but we're certainly starting to see a little bit more demand than what we were in the middle runs of last year. Now, for tomorrow, don't forget we do have non-farm payroll events going on as well. And just to sort of give you guys one final piece to sort of show you, this is something that I used in today's thing. I'll just make it a bit of a video thing. Oh, yeah, there we go. You guys can all see that now. Now, this is a SSI. It's called a Speculative Sentiment Index. And it's not something that's always used. You can probably type in SSI, MT4 indicator or something like that if you want to get a copy of these. They do have a few different variations. This is something I pulled out of Bloomberg. Now, here, if you can see my mouse, here in 07 is the last time we were very, very close to this red line on the top. Now, this one on the top is the idea that it's extreme bullishness if you're on this side and extreme bearishness if you're on the bottom. So whenever you're in the extremes, it kind of works like an RSI, I suppose. You can think of it as overbought, oversold. And the last time we were up here on this sort of realm was 07. And right now we're really not that far away from it. So I think people are starting to notice that. There's been lots of talk about bubbles in the last couple of weeks. And I suppose in some asset classes there probably are. But so far at this point in time, we are still sitting in between the lines and we're not quite there yet, but certainly something to consider in adding to maybe one of your trading strategies is a look at one of these SSI charts, or at least, a look once a month just to see where it's sitting on those longer term charts. So that's really all it is about. Of course, if you have any questions, then feel free to let me know. I don't use an SSI often. I've only really, it's only every now and again they come across my desk and I have a look at them. But certainly, something to keep in your forethoughts. Now, I will wrap it up for the night. Thank you very much for attending. I am looking forward to seeing you all again next week. Don't forget that next week, tomorrow, non-farm payroll event, I am expecting to see a little bit of an improvement on those non-farm payroll figures, hopefully. But the sector side of things, and of course, the types of jobs are also important to look at. So NFP isn't the only number to keep in mind. You should also be having a look at what you might be seeing in the types of full-time and part-time jobs, and what sectors are getting the best increases. Because if we're seeing them in services and a few other areas, it means that we're starting to see some of those signs of the economy starting to recover in the US. So keep an eye on that. We will be seeing it much later in the US session tomorrow. And don't forget, if you want to actually check out tomorrow's Trading Cup competition, feel free to chime in. It will be streamed live. I'm pretty sure there will be a few logins floating around. So you are most certainly welcome to get involved in the Trading Cup and have a watch and see what some of the best traders of the last 6 months at ACY have been able to achieve. Now, if you do have any questions, please feel free to shoot me an email at talktoal@acy.com. But of course, don't forget, you can also get in contact with me via any of my social media channels that you'll be easily able to find online or on our website. Now, that'll be all for tonight. I have enjoyed your company this evening. I look forward to seeing you all again next week, 7 p.m. on Tuesday. Bye for now.